Welcome everyone to Multifamily Investor Nation. I'm your host for today, Carlos D. Reinoso. I'm actually always your host here in Atlanta, Georgia. This is a meetup for Multifamily Investor Nation. Today's topic is going to be picking a multifamily market for investing in multifamily syndications. And that's the topic for today and the content. What I'd like to do is, as you're trickling in, as you're coming in, please let us know what city and state you're coming in from. If possible, also, put your contact information down below in the chat box, and either myself or someone from the Multifamily Investor Nation group will reach out to you as well. For everyone who does give us their email address, there will be a free webinar, how to get started in multifamily investing. Just for signing up, all you need to do is give us your email address and in your contact information, just give us a quick yes or a Y, letting us know that you would like that video, and we'll make sure to get it out to you. So while we get started, what I'd like to do, Marlene, you're one of our first guests here today, is if you would just tell us a little bit about yourself and what you're currently doing in multifamily space. And if by any chance, you're not active yet, just, let us know a little bit more about you, maybe your profession and how you came about this meetup today. And thank you for your time.
Okay, good evening. I'm Marlene, like you stated. I am not an investor. I want to be an investor. I'm very much interested. I currently work for a major airline, but at my age, I am looking to diversify and do something else. I've always loved real estate, and I've always been interested in multifamily. So the name caught me when I was going through
Nice.
Eventbrite or Meetup.
Meetups. Yeah.
Yes.
Nice. Thank you so much for that. So, and how long, you've been in the airline industry, and your capacity is you're a flight attendant or a manager there, or what is your capacity?
I'm one of their supervisors.
Nice. Awesome. Awesome. All right. Well, thank you so much for joining us today, and thank you so much for sharing. I truly appreciate that. And what we're going to do is we're going to get started. What happens often is people will join us as the meetup continues. And so we'll fill them in. You'll see me kind of repeat myself sometimes throughout. And then also, hopefully we could have a few more guests. And then what we'll do is we'll have the content, and then we'll jump into breakout rooms as well. So that's something to look forward to. And if not, I'll definitely let you know if there's just let's say yourself and myself and just a couple more guests, then we could just go into, one breakout room and, just kind of network there, if you will.
Okay. Sounds
All right,
good
awesome.
to me.
Awesome. Sounds great. Thank you. So yeah, as I was saying, this is Multifamily Investor Nation, Multifamily Meetups. I'm your host for today, Carlos D. And what we're going to be talking about today is picking the multifamily market. And if you bear with me for a second, what I'm going to do is pull up my presentation. Okay, there's Levon. I'm letting some other people who are trickling in now. And I'm going to share my screen. Hi, Levon. Thank you so much for joining us. This is Multifamily Investor Nation. What we're doing right now is we're introducing ourselves and what you're currently doing in the multifamily space. If you'd like, you could unmute yourself and kind of give us a quick brief introduction on yourself and what you're currently doing in the multifamily space. Thank you.
Hello, my name is Levan. I'm from the Bronx, New York City originally, but I live in Atlanta, Georgia now.
Nice.
The first property I ever bought was a duplex. So I like house hacked. I don't know what I mean.
Nice.
So, and then I bought 4 more properties after that. But what I'm looking to do is make a long story short, 1031 exchange my joints into a level up. I don't know how you word it.
That's perfect. I totally understood that. So you're saying right now you have duplexes and you want to level up to bigger multifamily properties.
Correct, like a 10 unit or something like that.
10 years old. Yeah. So what we're going to talk about today, let me tell you, it's going to help you, and I believe it's going to be beneficial, because what you'll find, Levon, is that you could go from a duplex to 100 units or more, and that's very possible. Even if you have no credit, even if you have very little money to get started, and there's many ways to do it. Trust me, there's a lot of gurus out there that'll teach you how. But my job today is to talk on the topic of picking a multifamily market for investing. And then within that, I'm also gonna, kind of touch up on it and let you know how you could go ahead and get started. So that's a great point. Thank you so much for sharing. And yeah, so let's get into the content. And then, like I was saying before, we'll have another opportunity to network toward the end as well and kind of get to know each other a little bit better. So yeah, this meetup is live from here, Atlanta, Georgia as well. I am native here. I've been here since 2007. Basically came over right before the crash. I kind of predicted it. I kind of knew it was coming. I've been a realtor for over 23 years now. So when you're active in the market, you could see it coming, but no one knew just how bad it was going to be, right? So I've been doing real estate since 1999 as an agent. Started originally in Miami, Florida, and I've been doing it in Georgia ever since. And now I'm actually transitioning more into multifamily because this is my truest passion. When I first decided to get my real estate license, my motivation, my muse, if you will, was being able to invest in large multifamily apartment buildings. So, I'm at a point now where in the process of taking down deals. So, dreams do come true. And again, I started, just like anybody else with, for me, it wasn't a duplex. I started with single family, and then I got a 5-unit. And then another investor saw what I did, and we joint ventured on deals, and then we bought a few 5 and 6 units. But after doing that and seeing what's available today, I could tell you that you could go from 5 and 6 all the way up to 100 units, no problem whatsoever. Okay, we got some more guests joining us. So thank you so much, everyone, for joining us today. This is kind of like a Valentine's edition, if you will. Hopefully everyone could see me on the screen. My full head is not cut off. And yeah, so today we're talking about picking a multifamily market. As you're joining us, Angel, thank you so much for joining us today. We're going to be talking about picking a multifamily market and for investing in multifamily syndications. All right, guys. So who am I and why am I here today giving this topic? By the way, could you guys see the screen where it says picking a multifamily market for investing here?
Yes.
Yes. Yes.
Awesome. Thank you, guys. I really appreciate that. Thank you so much. So yeah, why I'm here. My name is Carlos D. Reinoso. I am a co-organizer for Multifamily Investor Nation. They have over 52 chapters nationwide, and they're all talking the same topic, which is multifamily syndications and investing in multifamily apartments. I am the founder and CEO of Canis Major Investment Capital, LLC. It's my syndication arm, if you will. I'm a managing partner, a general partner, and I've also raised capital on deals, and I'm looking to continue. And I'm actually in the process right now of creating a fund of funds. It's a process, just getting started with it, but it's something that is near and dear to my heart. And if anybody has questions about a fund of funds, I could definitely answer any questions that I'm privy to up to now. But definitely seek a professional, seek a syndication attorney. I am not a syndication attorney by any means of the stretch of the imagination, but I do have experience in real estate for over 23 years, and I do have experience in investing in small multifamily, and and I do have several mentors that are guiding me as well, so I could pass on that information on to you guys. Awesome. So we still have a bunch of guests still joining us. Thank you, Vlad, also for joining us today. We appreciate your presence. Oh yeah, guys, and another thing that I do professionally is an acquisition specialist. Thanks for joining us, Vlad. And so basically all that means is that I know how to procure properties that are off market for great pricing, sometimes below retail, most times actually. I am an author. I've written 2 books. One is actually in the process. More people are joining us. So thank you so much, guys, for joining us. My first book was Selling Secrets You Can't Afford to Miss. It's a book that I wrote to give back to the single family industry, if you will. after so many years that it had been so good to me. And my recent book, I'm still in the process of writing it. It's basically an ebook, and the title is The Tax and Depreciation Benefits of Investing in Multifamily Apartment Syndications with my company, Canis Major Investment Capital LLC. So thank you guys for that. If you would like a copy of my ebook, I should hopefully have it ready. I'm thinking sometime this month. It's pretty much all written out, but I really want to do some really cool graphics for it. So I'm putting a lot of love and a lot of time into it because I want to put out a good package, if you will, for you guys that could actually benefit you. So thank you guys for that. All righty. So announcements as you're coming in, if you would, please let us know what city and state you're coming in from. If you're coming in from other countries, which sporadically we do have guests from other countries, let us know what city and state or what country you're coming in from. In the chat box, feel free to put your contact info. And lastly, anyone who gives us their email address will receive a webinar video, how to get started in multifamily investing. Just let us know that you'd like the video as well. All right, guys, we have a very special capital raising intensive coming up. And it's very important that you guys know of it because I don't want you to miss the opportunity. It's going to be an awesome event. I believe it's in Charlotte, South Carolina, but I'm going to give you just a taste of it real quick so you guys could see what you could expect. And I'm telling you, there's going to be there's about 36 syndicators that are actually doing deals right now that are very serious that will be there. And then the last day, I believe it is, there's usually like a nice meal with Dan and the rest of the group as well. Dan Hanford being the lead of Multifamily Investor Nation, and I can't think of their investment arm right now, but it'll come to me. It'll definitely come to me. But here we go. So, passiveinvesting.com. My apologies. Passiveinvesting.com. So right here, let's take a quick look at the MFIN Con Charlotte 2023. Get your tickets now. It's actually in person. They're doing more in-person events these days, and this is a 3-day event. So let's take a quick look, a quick listen here. And I'm going to cue it up. Want to find more deals and raise more capital and find money? Want to learn underwriting? Want to close more deals, partner with other investors? Just looking to get started with investing? This event has saved people years of wasted time. Learn from 60 plus multifamily syndicators. And I think Alex Rodriguez, I was just going to say. There you go, Alex Rodriguez. I guess he's going to be the main speaker, guest speaker. All righty. So that's going to be a great event. I went to one, I believe it was 2022 in January, and it was awesome. I got to meet a lot of people, and actually from that meetup, there was this group was formed actually, Cash Flow, CFC, Cash Flow with Prashant Kumar and Christian Carrillo and Paul Sr. That group was actually formed mostly from the guests that were there that day. Admit the waiting room. Okay, so awesome. More people are joining us today. Let me see if I could go back to the presentation. So I guess I got to stop share. Okay, stop share. There we go. Yeah, that worked. All right, guys. So, but now I got to go back to sharing because I got to share the screen again. Okay, here we are. Back to the presentation, and thank you so much. I appreciate it. Thank you, Angel, for the 2 thumbs up. I appreciate it. So the 2 things we want to consider, there's 5 things to consider when you're analyzing your market. And of those things, Yeah, I was at Selling Secrets. You guys, so basically you could find me on all social media. The start video. Yeah, you could find me on all social media. So I'm going to skip through that. You could use my promo code Canis 100 and it should save you $100 off the price of admission for the next meetup. Okay, for that intensive that I was just referring to. It won't go. Okay. And again, okay. So the market drivers and the main things you guys want to focus on when you're trying to pick a market is the income population. So you want to make sure that there's people moving into the area and not moving out. So that there's what we call gentrification. There are people moving into the area is growing, and the population is slowly increasing. Look for areas that are growing. Tools and websites that you can use is Google. So you go to Google and for instance, you put Georgia and it'll tell you the population in Georgia. And then you want to go more specifically. So you say Atlanta, Georgia, and you'll see that there's whatever, over 200,000 or 2 million people in the state. And then those are two great places to go right off the bat. U-Haul reports is another one. So with U-Haul reports, it'll kind of tell you like where people are moving out of and where they're moving their trucks to. So a lot of times you'll be able to see, all right, look, people are moving from California over to Texas. People are moving from New York over to South Carolina, from New York to Florida, and so on. And then another site is uscensus.gov. That's uscensus.gov. And then US Census was just completed recently. So the information is pretty recent and accurate. So that gives you a lot of the population, the job growth, and the income potential as well. Software to use, CoStar, obviously when you're first getting started, maybe not, I wouldn't recommend CoStar because it's a little bit more expensive to get started. But it is a tool that you'll definitely need in this industry. So as soon as you can, I would highly recommend. If you go to my YouTube channel, I do have a demo, a CoStar demo. Feel free to check that out and it'll kind of give you a better idea. Also, you could go to axiometrics.com. They have a lot of great info. RealPage is kind of similar to CoStar, but it doesn't have as big a broad of data inputs. And then you have City-Data. And that one, it's great because it does have like charts that give you the information and it kind of makes it very visual. It could help you with presentations and offering memorandums, if you will. And avoid areas that are stagnant or negative population. If it's not growing, there's areas in the southeast here in Georgia that you see are on a decline and people are moving out of the area. Altogether avoid those areas because if there's a decline in the population, there's reasons for that, and maybe the employers are moving out and taking their employees with them, and maybe like the major blue chip companies, if you will, are also moving out of the area. The median household income and the growth in the market is very important. So if you're seeing property values going up, that's a great sign. If you're seeing them drop, then that could be a sign that that area is actually having people move out. And also, like right now, with the interest rates being so high, you will see a price drop in household, in let's say in house pricing, because so the buyer right now with the higher interest rates does not have the same affordability that they had maybe 6 months ago or last year toward the beginning of the year. So that could be a temporary change, but once you see that it's declining and it's a permanent change, then that's when you really have to worry about the area. Personally, I personally like to invest in areas that have 100,000 in population or more, at least 75,000 in actually at least 45 is the very least 45,000 in household income. And yeah, and I want an area that's actually growing, not declining. We mentioned blue chip companies. So surrounding the property, we want to make sure that we have major corporations. In Georgia, we have Coca-Cola industry. We have, I believe Kia is here, and a lot of other major brands, if you will. We have a lot of huge Amazon warehousing and stuff. So those companies add to the area. Those companies are going to increase the population. And of course, while there's more job growth, there's also going to be more population growth. And that's what we want to see, where there's an increase in both. Again, job growth, the tools to use to check out the local job growth. You could, again, look at Google. You could go to the Economic Development Committee. That's a department, and they have their own website. And enter your city of interest. So you could do that for any city in the union. And then you also want to make sure that you're looking at increasing home values. And again, just because it's a temporary decrease, that factor alone should not be enough to deter you. But when there's several factors that are indicating that the market is dropping, that's when I would suggest staying away. Personally, I would not recommend tertiary markets. Especially not if you're just getting started. If you're getting started, a lot of people start with Class C and Class B properties, and I would suggest that too. There's a lot of things that could benefit. You could go with FHA agency debt or Fannie Mae agency debt, and a lot of times it could be non-recourse loans. So I would highly recommend, if you're just getting started, maybe consider working with someone who's experienced and who's invested in the past, or also, start off with smaller units. So any mistakes that occur might not be so drastic, if you will. Let's see, this should switch to the next page, and I don't know why it does not. So let me go down here. Here we go. So make sure you're picking a market that you'll be able to sell later. And that sounds like a no-brainer, right? But a lot of times you see a great deal and you're like, man, I really got to jump on that one. It's a great opportunity. But what you don't realize is that when you try to sell later, it's going to be very difficult, and there might not be an end buyer. So without an exit strategy where you could get out of the deal later, you should not invest in that area. If there's any questions so far, please feel free. Any comments, feel free to raise your hand. And then, I could answer any questions you might have. And, but we're almost done here, guys. So thank you for that. So yeah, make sure that it's a good deal. You could definitely sell. Review multifamily market reports. So every brokerage, most major multifamily brokerage, CBRE, Marcus and Millichap, the bigger chains, right? They're going to have a report, mostly coming straight from CoStar, but from whatever site they're using, which is going to tell you what's going on in that market. So, everything, population, companies that are in the area, kind of like an offering memorandum, if you will, that has all that important information in graphs and very nicely detailed. And a lot of times the report is over 100 pages of a lot of just detailed information about the area and the market. So you could reach out to a broker. You could also use Yardi Matrix. It's a little less expensive, and it's Yardi Matrix. I consider it better, like when you actually have property management, because that one is more, gold to kind of like hands-on property management as well. I used to use it when I was a property manager, and that was like one of my favorite sites of like all the apps I've ever used. It's really great. And again, it's not as expensive as CoStar, so it could be a good resource for you. Google by city and by brokers. You could put in Google, you could put, brokers in Wichita, Texas, right where Angel's at. Hit a broker there and say, hey, I'd like to have your report for this area. Why don't you help me out with that? And hopefully in the future, we do get a deal from that area. you're going to be my broker. You're going to be the person I want to work with. And they're going to be more inclined if you give them something like, I've always said, I like to add value first. So listen, before you give me this, let me tell you this deal, I'm going to close it with you. And I want it to be in your area and you're going to help me out. So we're going to do it together. So that person synergizes with you and they're going to be more inclined to want to help you out. And property managers could also give you like some kind of underwriting report where they give you more information on the area, the market, and the current comps, which is why it's good to reach out to a property manager. So the comps is the comparative properties, and it'll tell you like per unit what the price is. It'll tell you, like the square footage per unit and the difference in pricing per square foot, so that you can make a good analysis of how your property compares to your competitors. And guys, you should always know your competitors' pricing, and if they have any special giveaways or concessions, know what those are so you could be ahead of them. And always something else you could do is secret shop your market, secret shop the property. And we're getting to that too. There's another part coming up here. So dive down to the sub-market levels when you're searching. So you go to Atlanta MSA, from Atlanta MSA, metropolitan statistical area, you're going to jump over to, let's say, Marietta, Roswell. You'll see the surrounding areas to your little pinpoint on your map. That surrounding area, that's your secondary market. That's your secondary market. And then on the outskirts of that market, sometimes the primary is so big that it actually trickles down into the secondary and actually overfloods into the tertiary market as well. If you're lucky enough to find one of those markets, yes, that's a good one to invest. I'm not telling you any investing advice, but I would tell you from experience, that's a good market because that's a market that's gentrifying and it's about to catapult into a major population area. Check crime statistics in the market. There's different places you could go. Again, city data. I personally like using Trulia. If you guys are familiar with an investor and author as well, James Kandasamy, he's in Texas, awesome syndicator. A long time ago, him and I had a conversation. He's like, Carlos, definitely use Trulia for crime reports. And I was like, it's funny that he's telling me this because I've been using Trulia since Trulia first came out. So I definitely think it's a good one. It kind of gives you like a graph and it'll show you like in red the crime areas, and it'll also tell you like what the crime per that area is. Okay, guys, we're almost at the end. NeighborhoodScoutCrime.com is another great place. Neighborhood Scout Crime. Trulia Statista is another one. Local property management companies could help you out. And then what you definitely want to do is tour the property at the area in the morning, in the afternoon, at night, and maybe on the weekends, just different times where you could actually get a real feel for the area. Excuse me, because sometimes you pass an area in the daytime and it looks so beautiful and peaceful and relaxed, but you go in at night and it's a totally different area. So definitely review the areas very well by going on different times. Ask local brokers to help you out with, again, the report, or to ask them questions specifically that you might have about their market. If you reach out to a broker, let that be because you want to work near that broker in the area, or even better, specifically, you want to work with that broker. As a broker myself, I could tell you that you don't want to waste time with someone who's just now getting started or whatnot. But at the same time, you do want to help because we all got to start somewhere, right? So my point is, as brokers, we're willing to help, but consider the person's time and kind of give back and hopefully score a deal with them, and they're going to be more inclined to continue paying it forward, if you will. The area current rents, if they're under market, it's a bad call. You don't want to be under market. Well, if you're under market, it's not a bad call. If you're under market, then it has the potential for value add. So that's a good thing. But keep in mind that if it's declining, it might not be a good thing at all. So you want to look for increase. And well, you need to value add in other to increase the risk. Yeah, so you want to consider if it is under market. Okay, so what's the potential to add value to this property? So we could increase the value and then thereby increasing rents. So just so you know, the potential gross income is one thing, but when you increase the NOI of the property, the net operating income, you're also gonna increase the property value. And that's why I highly recommend that when you're analyzing the market, you reach out to property managers because you'll need a property management company. You want to start your relationships early and you want to start long-lasting relationships. I think a lot of investors that are here on the call today would agree that multifamily investing syndications, especially, are relationship business. You definitely want to grow with people, and you want to do a deal and be one of those people that people enjoy your company, always with a smile on your face, always looking to help and add value before you take anything from anybody. That's best advice I have learned and I could give. I hope that's beneficial to you guys. That's my presentation. So what we'll do now is we'll open it to any questions or comments. And if there are none, we could jump into the breakout rooms, but something tells me there should be some questions. So if you would, please just unmute or feel free to raise your hands and ask away.
So I was just looking at the city data website. How do you know how to like focus in on it?
Yeah, I would have to be right there, but if I'm not mistaken, you go to the search bar and put specifically what city, what state you're looking at, and it should spit out like all the information that, in general.
Okay.
Yeah. Let me know if that works or not, and then we could go further on it if not. But that site has a lot of information, including the crime reports. So definitely a good place to go check out more information. A quick place that I forgot, and great question. Thank you, Angel. A great place that I forgot to mention, and I haven't used it as much, but it is a quick app that you could kind of get a feel for the population. It's called bestplaces.net. Bestplaces.net. And that one was suggested by Rod Cleef. If you guys know Rod Cleef, he's a very famous investor in Sarasota, Florida. Great guy, great mentor. He suggested that bestplaces.com, just like a quick reference somewhere you could just go in real quick and go, what's the population in this town? Boom. And it's not as updated as you would like it to be. But just to get a quick general idea, if it says 10,000, the population hasn't grown that much to go into like 300,000. So chances are it's somewhere within that 10,000 range. But if you see an area that says 100,000 or more, that, in my opinion, and my professional opinion, I should say, that's a good place to consider, if you will. And there's one more thing here. Okay. All right. So that's our topic for today. Next month's topic is going to be working with property management for your multifamily deals. That was Q&A. We're going to jump into the breakout rooms, if you guys will. In the breakout rooms, pretty much open forum, whatever you guys would like to talk about. But mostly I'd like for us to introduce ourselves and kind of network amongst ourselves, if you will.
I have a question before you leave.
Please go ahead.
I put it in the chat, but I don't know if you saw it. Do you visit the markets or do you invest off-site?
Say that question one more time about the markets.
Do you visit the markets or do you invest off-site?
Oh, okay. That's a great question. So both, actually. So before I invest, like let's say it is off-site. So I was just recently raising capital on a deal in San Antonio, Texas.
Okay.
So I was raising capital in that deal, but before I said, yeah, I'm going to throw in some of my money in there, I actually went and I visited Texas, and I went to the property and I did a walkthrough of the property. And so, yeah, I would say I highly recommend, even if you're investing out of state, that you still at least take one tour of the property, and even to go further, if you're going to be analyzing the property and doing your due diligence, go one step further and make sure that you analyze every single unit. So yeah, me personally, if the property is in another state, it'll be somewhere in the southeastern states, which is where I invest. So yeah, I would definitely invest the time in either driving or taking a flight to the property before I even consider, because how am I going to talk to the investor about a property that I don't really know intimately, right? So I could tell you, like sometimes you'll do the property video. I could tell you in general based on stats and that kind of stuff, but to go into specifics, if I don't open that door and go into that apartment and see that, that this one has open floor plan, I wouldn't be able to tell you that that property has an open floor plan and that the other one, that maybe we have studio apartments, right? So for me, I think it's well advised as part of your due diligence to always walk the property. And even better, before you even walk the property, walk the market. And even before you walk the market, analyze the market. So great question, man. I really appreciate that one. So yeah, definitely go and touch the property physically. And if you could, tour the property, and even better, tour every single unit.
Can I ask you another question?
Of course, that's what we're here for.
Okay. In 2000, I think it was 2003, 2004, right? For my birthday, I went to Arizona.
Nice.
Loved it. I bought a cactus back from Arizona.
Nice.
I bought
That's
a cactus back. That's
Hey,
how much
I always get a
love it.
bonsai tree when I go to Florida. I have like a collection of bonsai trees. I love it. That's awesome.
But I'm asking, are there any particular markets that you like at the current time? And I'm going to give you my secret before I ask you the question.
Yeah.
I like Oklahoma City, but I'm
that's a great market. Yeah.
Is there any particular markets that you like?
Yeah, that's a great question. So for me, I don't do Oklahoma, but I know it is a good market. Okay. I have researched it. I have studied it a little bit further. But what I like to do, and for me, is it just keeps it simple for me, right? It's what I know. I stick to what I know. So some people invest in self-storage. I honestly don't, because it's not my forte. It doesn't rock my boat, if you will. So what I'd like to invest in, you know what I mean? What I do like to invest in is multifamily. I love it. That's my passion. It's the reason I got into investing in the real estate in the first place. So, but for me, the main market is the southeastern market. So you're talking, let's start from Florida, which is where I originated, all the way to Georgia, Texas, Arizona. So basically the southeastern states, if you will. And the main reason is because it's, again, what I know, and they're landlord friendly states. It's going to benefit me to be a landlord in those states, as opposed to states like California, not to, to knock them down, but as opposed to those states where they're more tenant friendly or resident friendly.
Yeah. That makes sense.
Yeah. So that's why.
Yeah. I'm heavily invested in Clayton County. So you live in Georgia, so you understand what I mean.
Yeah, Clayton is a great area for sure.
Yeah. So I'm just asking to one of the questions I always ask people, like, if there was one piece of advice you would give me about how to be more successful in this industry, what would you tell me?
Oh, that's a great question. I gotta put my video on for that one. I like that one. I'm serious.
I'm trying to hit like $1 trillion.
Yeah. So your question is, hold on, let me get back on camera. How do I get lost here? Hold on. Yeah. So your question is, what's the one thing that could help you be successful in this industry? Correct?
Yeah, correct.
That's a great question, and it has a very simple answer. This industry, in my opinion, like people say in real estate, location, location, location. That's great. It really is, because you got to find the property in the right location without a doubt. But it's really a relationship business. And it's not just a relationship business where, oh yeah, I know Tom from back in the days. Well, have you kept in contact with Tom? Have you checked in on him? Have you guys gone out for lunch, breakfast, dinner? Have you shot pool? Have you shot pool one day? You know what I mean? And I'm not and I'm not knocking anyone, because I'll tell you, I'm the worst at that. My follow-up is horrible, but I have this place in my heart where even if I'm not seeing you, dude, for real, even if I'm not seeing you, you're in my thoughts, you're in my prayers, you're in my, I'm thinking about this deal, if it's going to work for you or not. So I get people reaching out to me about, hey, if you find 30 units, let me know, right? I have those people in mind. So when I do hear about, like recently, a 46 unit, I'm like, I remember Chan was telling me he was in my meetup. Yeah, he was in my meetup 2 months ago, 2 meetups ago. And he's like, yeah, if you find anything 33 units or more, I'm in. I shot it to him. Listen, I'm not in the deal. I'm not getting nothing for the deal. But if I could help him, relationships, right? If I could help him, then I'm hoping in the future.
Everybody wins.
Exactly. And and not only that, you feel good, man. Seriously. When you help someone, it's a good feeling. So to me, it's kind of selfish in a way. I like helping. I'm one of those people that actually likes to help. I have this meetup. I pay out of my pocket for this meetup. I do it gladly because I love to help. I'm serious. I'm not even just saying that. I really do. Like every industry I've ever had, real estate, insurance, property management, it's all been, to help others, basically. And even this meetup, I started this meetup because I was getting mentored by Dan Hanford, and I thought someone else could benefit from it. And then my mentor said, hey, Carlos, we would like for you to be a co-organizer for our group. And I jumped at it because I was actually in the point of that I was looking for that. Right. So help people, give before you take, start relationships. If you're not good at it, I think at the very least you could say, look, guys, I'm not good at follow-up with relationships. You guys mean a lot to me. If you see me like falling away or something, please reach out, because it's probably, and I'm the kind of person, I don't ask for stuff, dude. I'm not, hey, Bob, I remember I did that for you. Can you do this for me? Honestly, I'm not that person, honestly. I'll be starving, right? I'll be homeless. I'll be out in the street and I'll find a can of something to eat and I won't bother anybody. I don't know if that makes sense to anybody else, but something tells me somebody else has to hear that. But you also have to break out of that, if you will, and start to, get out of your comfort zone and say, listen, I know I meant to call Bob in January, first week in January. My God, I'm behind schedule. Let me call him and let him know why I haven't reached out yet. Right. And I think someone else is going to respect that and is going to say, I see that Carlos is not great at follow-up, when it comes to the relationship. But he's definitely
he's genuine.
He's genuine. Yeah, exactly. He's going to tell it like it is. Exactly. That's true. Yep.
That makes sense. I'm not going to hold you. I just had those couple of questions.
Dude, those were awesome questions, and I really appreciate them. Thank you.
Okay.
Let me see. I also have a question.
Please.
Okay, this is Marlene.
Awesome.
I want to know, how do you get started? I had 5 houses and I lost them all because I was doing. It's okay. It's gotcha. My learning process. So
exactly.
I want to know, how do I get started again? And without using my money from my retirement. I had 3 in Florida and 2 here in Atlanta, and they're all gone. But I'm trying to see how to get started, because Back then, I used my money and I did FHA. Now I want to go on the investment side. So how do I start? All the realtors that I've met over the last 30 plus years, they're looking for a commission. They're looking to sell. They're not looking to mentor. And I get it because everyone wants to make money, but I'm looking for someone who can mentor me, teach me how to do this using other people's money. And I don't mind starting all over again with a single family home and then work my way to a 500 unit apartment building.
Yeah. Yeah. And it's definitely possible. Like I was trying to tell Levon earlier today, is that that's definitely a possibility. So to answer your question, how can you do it? Is, I could never talk to you about something that I don't know. If I don't know, I'll tell you I don't know.
Right.
But what I could tell you is from my own experience. So what I had to do, I had to sell a single family home that I had. Okay. I had a single family home. And then I had to get equity from another single family home and use that to give a down payment to buy my own multifamily apartment building. It was a 5-unit in Miami, Florida. Okay. 5-unit. So I did that. At the time, I loved the house, right? I needed somewhere to live, so I stayed in the house. But I got the equity, and that equity helped me. Right now, I'm actually in the process of doing that exact thing again. I'm about to sell my house. The only thing is that I've lived and learned, and what I've learned is that instead of buying, and this is what I was going to tell you, Levon, instead of buying a 5-unit these days, I could get that same investment and invest alongside passively into other syndicators' deals. Now, why is that going to help me get started? Because as a limited partner, I'm going to receive the private placement memorandum. That's going to tell me the whole entire risk from soup to nuts, head to toe, everything that has to do with that syndication. What the investor splits are, what my level of risk is, the type of investor that I have to be in order to be able to get in the deal. So right there, you could learn that that's over 100 and I think like 20 pages most times. So you could learn a lot there. Plus, you'll see the presentation of the property. Plus, you'll see the numbers that the investors are working to achieve as far as the IRR, the internal rate of return, as far as cash on cash demand, what they want to get from it, as far as the DSCR, your debt service coverage ratio, what that should be, which should be at least 1.25. And especially if you're going FHA or Fannie Mae, they're going to want to make sure that your DCR is going to be at least 1.25. So the experience you're going to gain from investing passively is going to be well worth your time. And in the end, most of these syndications, they they exit the deal 3 to 5 years or 5 to 7 sometimes, depending down the line. And at that point, you're going to profit. And it's usually anywhere from like a 1.8 to a 2x multiple of your initial investment. Plus, you're also getting the dispositions on either a monthly or quarterly basis. So you're also profiting from your own deal. So as you profit, you're going to be learning a lot. And then you'll get the K1s either at the end of the year or the beginning of the fiscal year. And then you'll be able to use that to file your taxes. And again, more experience because you're going to be hands-on learning this. And then you'll get the next problem, which will be you have so much capital that you're going to go, now what do I do? And then that's when, you could say, hey, I'm going to invest in Carlos's deal. I'm going to put money in Carlos's fund of funds. We're going to be ready when a good deal comes. We're going to be ready to jump on it. And lastly, I would say this, because it is a big question, if you will, is Angel Williams has her own program as well. And, I love seriously, like I've always said, I love helping my friends and promoting them if anything I could do. And I believe in Angel's program. I think she does great. She has a lot of knowledge, hands-on knowledge, and she has different programs that she has set up. So I would recommend reaching out to her. And it's called the Academy Presents. And they do have like an education arm. I do have, again, my own ebook that I could share gladly with you. And there's other mentors, that could help you as well. Some of them, they're going to be kind of pricey. My main thing I try to do seriously is invest the least amount to gain the greatest return
Great.
possible, right? So I'd like to get a good ROI on my investment. So that's my way of looking at it. So if I could spend nothing, I'll do that. But I also believe there's a level where once you do start spending, you start seeing better and better results. And I'll tell you, the more I've spent, the closer I've gotten to taking down my own syndications. So I highly recommend joining a mentor group, mastermind group. This meetup, we meet every first Monday of the month. So join us every Monday. And I was going to say also, and lastly, in closing, is that all these meetups are edited. They're saved, edited, and posted on my YouTube channel. So you could always go back to YouTube and see previous recordings as well. And you'll see everything from how to analyze the market, to doing your due diligence, to acquisitions after you close the deal. Asset management after you close the deal, and how to properly maintain your property, right? So I highly recommend you check out our YouTube channel, my YouTube channel, and basically Carlos D. Reinoso, and it's here in the chat box in my notes here. So just Carlos D. Reinoso, I think it's 1592, which is the amount of hours, viewing hours. So great question. Very great question. Great question. Anybody else have any questions? If not, let's go real quick into the breakout rooms. Let's go ahead and do that. Any last questions before we jump into the breakout rooms? Perfect. Sign automatically. We're all going, I think, to the same room, guys. We'll see you there.